Hello, everyone, and welcome to another Genius Wednesdays. Today is Wednesday, June 3rd. I am Kristina Bruhan with CoinGenius. I am joined here by the CoinGenius panel for Genius Wednesdays. We've got Josh Lawler with us. We've got Sultan, myself, and Jeremy Bourne. We've got Carl Meyer and Dustin Minch from the team all here. We do not have our head of market research, Steve Quan, today because he has riots right by his house in Chicago, and things are very literally close to home for him, and he needs to protect his family and his neighborhood. Things are getting very crazy, and we're seeing it be very crazy in the stock market as well. So thankfully, there's lots of folks that have been seeing the roller coasters and have opinions. We've got no shortage of opinions here on this show. But first, I'd like to introduce our guest. This week, we have with us Mr. Gary Lee from Coin Market Manager. They do data and analytics that we're big fans of, and I invited him to join this week. So Gary, if you'd like to do a quick introduction to yourself, and feel free to jump in with some market analysis. I know this team has a lot of opinions and we'll be all over it. So might want to get a word in edgewise while you can, sir.
Sure. Hi, yeah, I'm Gary Lee from Coin Market Manager. I'm from the development side of our platform. We are essentially a crypto analytics, insights, and journaling software. And we provide really in-depth analytics specifically into the derivative market. One of the things that we've been focusing on recently as well is verification of customers. So what we have is at the moment a lot of people on Twitter and various places who have various claims about who they are, and we've built a tool that basically allows them to plug their API keys in to our system and have a consumer-facing page where people can verify their positions and the trades and things that they do that show who they really are.
In a nutshell, it basically helps you become a better trader, essentially.
Essentially, we are an education platform to some degree that gives you such in-depth insight analytics that you can see perhaps on a Tuesday at 3 o'clock, you always make the same poor decisions, or Thursdays are a great day for you to trade. And you can start to identify those things and become a better trader.
I love that. That would get a thumbs up from me if we had like a ranking system. I would give my stamp of approval on that one. Awesome. We'll go around the table really quick. Mr. Josh Lawler, would you like to go next?
Sure. So I am apparently Mr. Josh Lawler. I am a partner at the law firm Zuber Lawler, where I head our firm's new technology department and handle mergers and acquisitions and finance commercial and IP transactions. I work quite a bit with kind of leading edge technology and particularly digital ledger technology.
Thank you, sir.
You're welcome.
Mr. Dustin Minch, our head of mining analytics.
Yes. My name's Dustin Minch. I am head of mining intelligence for CoinGenius.
Awesome. And Mr. Sultan, are you with us today?
Come on. Sorry, I thought I was still on mute. Yes, I am here. It's been strange days in New York. We're facing a similar amount of riots to Chicago and a few other cities. Thankfully, Harlem has been. I think a lot of that is due to the community engagement that we have, not just across a variety of different groups, but with clergy and a variety of other organizations. But from, I would say, Midtown down and, Brooklyn and Queens, I don't know if you want to take a look at my Twitter, but it looks literally like the South Bronx in the 1970s.
Are the Warriors there?
No, but the Guardian Angels are out, and Curtis Sliwa got into a fist fight with looters last night in the Lower East Side.
Wow. Okay.
I'm not sure if I'm supposed to share this, but Steve fought off a looter from his neighborhood store and then held him there with all of his jujitsu, I'm going to mess it up, whatever his martial arts moves were, and held him there until the cops got there, which was why he's like, yeah, I'm not going to be on the show. I'm going to go protect the neighborhood.
Superhero. I hope he's okay.
Yeah. So I think we also have Justin O'Connell with us, and we've got a few more folks from CoinGenius. If you chime in, just kind of introduce yourself, but we'll get started with the actual market analysis for this week. So here's what I know from the trading channels. Things were bad and things are all over the place, and we're very sentiment driven right now. And the stock market itself is not holding up so well, also being sentiment driven. And BTC is remarkably staying close to 10K despite market pressures, and I'm sure there's a bunch of reasons for all of that. So on that note, I'll turn it over to you guys to kind of give your feedback of what you guys saw happen this week and what you think you can expect as we get through the rest of Q2 and start to look towards the future of what's going to happen from here.
Wow.
It's always Josh first that jumps in, isn't it?
Yeah, no, I mean, I'm sitting here thinking that somebody needs to establish the Josh Lawler, how bad is the apocalypse chart. I was kind of holding off on providing an opinion because I feel like I say the same thing for a long period of time. But, the stock market is actually having a pretty good day. Precious metals are down. It's almost like people think that we've got, an economic expansion going on. And against that background, we've got, riots instead of social distancing. I personally just kind of don't understand. Strangely enough, the crypto markets that I don't focus on particularly, really just a few projects that I like, but they actually make more sense to me. They're right now seem to be driven by actual news, not necessarily Bitcoin, but some of the altcoin projects. So the world's topsy-turvy. I'm not sure what else to say.
I'd say that what I've noticed, I've been reporting on the repo market since about September last year, and currently just announced again last week, there's $1 billion a day being pumped into the repo market and by the Fed. And when that happened in September, we were seeing that money essentially what analysts have been looking at is it's being pumped into the stock market on a daily and then pulled out again, and they're just pulling out their profits from borrowing that money at such a low rate. And we're now back at that same situation again as of a few days ago, and lo and behold, stock market starts pumping again. And so for me, so long as the repo market keeps getting pumped, we're going to keep seeing the stock market go up. And the amount of money that we see in the crypto market is, circa 180, $200 billion. In comparison to the financial markets, it's pennies. And so I don't know right now at what point the people who really have the money are going to start deciding to pump that into the crypto space, where we actually see and go lift off into where everybody hopes this final destination is going to be.
So do you see a flippening kind of type of effect where the flip is from the traditional equity markets into the crypto markets?
I have I put a prediction in about 2 years ago. And this is a completely wild, speculated idea that what we would see happen was people would start to have less trust in the stock market, start investing. I told everybody invest in gold, and start putting your money into commodities. And at the same time, we would see the crypto market decline as well. So as all that capital went into the commodities, the gold will reach a much higher high than where we are now. And then at some point, what we're going to see is a huge buyback in stocks. Now, in order for that to happen, my concept I think might happen is that Amazon, Google, all the big brands will start releasing their own coins for whatever reason, as there is a market adoption, and they want people to move their money from their stocks into their coin offerings that they're going to have. People will do it for the quick wins. And then Amazon and other big companies won't necessarily care so much that their stock price is plummeting, because once they get to buy it back for pennies on the dollar, they'll own most of their companies back again. That's my skeptical view of how I see the future, and all the quote unquote, well, I won't say the word, but bad coins, crap coins. Not sure how PC we have to be on this call. They're not going to exist in a couple of years' time. The coins that will exist will be the big brands that come out. Is how I see it.
Not sure I agree with that one entirely.
Sure.
Just because it ignores use case, which is my favorite thing. So there's a lot of smaller coins that actually, from a supply and demand value proposition perspective, have a pretty good profile.
I agree with that. I think that those will be bigger brands. There's a lot of trash out there. I believe that, the coins that we are seeing, like BAT is a perfect example. I can see that it's such a great use case, and Brave Browser is becoming a big brand. Some of these companies are very small brands in the world of brands, and they will be part of the big brand movement later. I just think there's a tremendous amount of garbage out there as well.
Yeah, well, no, clearly there is. So I just took a quick look, and Amazon is owned 58% by institutions, which honestly was a lower number than I thought it was going to be. Do you see institutions trading out of equity that actually represents a slice of ownership of a company into a token that is most likely a medium of exchange use case for Amazon, where there's no inherent economic value on that? Because I think that's kind of a stretch, but I don't know. Oz, you may have a better idea on that one than I do.
I'd like to up the ante on that question. Does Tesla landing their space shuttle and making that space economy so much more affordable now, does that play a factor in maybe this?
They're not making it more affordable.
Drive, so not to muddle everything, but I'm just going to throw it out there.
Affordable is getting it down to under $150 a pound to get stuff into space, and the only people who are trying to do that is Firefly, and they're based out of Texas. You've raised a couple of questions there. If we talk about the tokenization of Amazon and some of these other larger companies that are coming, I think this is in line with where the USDT is going, and the fact that we're probably moving towards digital currency inside of the next 12 to 18 months. And a large portion of that, I think, is going to come from the fact that second wave of COVID is close to hitting. I think the protests and the subsequent riots will continue to increase the exposure risk and rate. You're not going to see anything for 2 weeks. We're just seeing the Memorial Day fallout right now. And that's going to raise a continual question of responses in between federal and state. I am not a fan of anything in this manner and fashion, but I think the Fed is going to have to get involved with some of the states to a larger degree, because if you look at states like New York, they've been horribly mismanaged. Cuomo put COVID patients in nursing homes and created mass kills, right? And then what he did was he signed a executive order from the state indemnifying the state, the executives of those homes to any kind of prosecution. But I'm sure that there's liability suits that are going to come outside of these types of things. And then above and beyond that, we've had a numerous amount of challenges on the ground with supply chain disruptions. Before the riots, we were talking 50% of New York stores weren't coming back. Now what we're talking about is 15% of the population has left. It could be more than 50% of the stores. Insurance payments are probably not going to cover a lot of what the rioters caused damage to. Supply stocks that were held at lower prices previously won't be available to people. And the challenges that we're going to face are going to be relatively large. And this is coming inside of the next 3 months. The cascading market impacts, I don't think are going to be that dramatic, though, because what we're looking at is, again, if we're looking at the stock exchange, the NYSE, you're looking at a breadbasket, right? It's a breadbasket of the top 30. If we start looking at currency markets, we could start seeing if you look at the currency markets, we could see a variety of fluctuations, and these are stemming from other geopolitical things that have just occurred. China has basically taken Hong Kong back, okay, and eliminated their autonomy. The United Kingdom, Boris Johnson has come out and said that he will give citizenship to 3 million people from Hong Kong. So what does that mean? That means there's going to be a massive brain drain. Okay, that means that there's a thought leadership drain from Hong Kong that's going to basically benefit the FTSE, and it's going to benefit the English markets, but that raises a lot of questions in terms of the long-term stability and longevity of Hong Kong, as well as what that means for financial firms that are based there, HSBC Bank being one that I really think that a lot of folks might start just pulling their money out of. And then we look at things like gold importation. Gold importation in the United States right now is at an all-time high. We've been moving massive amounts of gold into the United States. Why? Because I think that the changes in regulations to the Fed, which put the Fed under the auspices of the executive for the first time in a long period of time, are going to move us towards the creation of a gold-backed digital dollar. And once all of these things happen inside of the next, we're talking about year and a half, we're going to be looking at a tremendously new landscape. Challenges, I think, to this are going to be the uptick in utilization by how it's one thing to have an EBT card and lose an EBT card, and if those of you who don't know what that is, that's basically WIC, that's food stamps, but it comes on a debit card now in most states, right? So in between the challenges that you have of securitizing how people are going to manage their digital currencies, and also at the same point in time, what you're doing is you're returning people back to a purview of understanding currency, digital currency, from the same perspective that was had inside of Europe previously. And that perspective is that if I went to, I live in Holland and I went to France for lunch, and I had to go to Germany for a business meeting, and then I had to end up in Italy, I'm now carrying 4 to 5 currencies, right? If you had to run through the channel to go to England, you're now carrying an additional currency. That's what I think the expectation and experience is going to be for most Americans going into 2021, end of 2021, beginning of 2022. And then the last couple things I'll just want to throw out here in relation to this tokenization by large corporations. I put it to you this way: what is it? What's the paradigm? What's it backed by? What's the data on it? Are we monetizing, citizen data now? Is there a use case there for taking some of that to UBI? I mean, all of these questions are going to come up, and I don't think these companies have fully thought this stuff through.
No, I agree.
Amazon, though, I mean, just to be clear on this, Amazon's got the same model that Binance has. And the Amazon token can just provide, a discount on transaction fees or a discount on Prime, and they can generate some value based on supply and demand off that.
They're running a loyalty point program. That's not
right.
a token.
Right. They're running a loyalty point program with a third-party outside liquidity source. That's the difference, is like, you can sell the loyalty points and they fractionalize and increase in value. I could see them doing that. I don't see it replacing Amazon stock.
What I see when I said what I believe will happen is that people will look at the opportunity to 10x their investment, and that's why they'll move that money over. I think that people are inherently greedy and will move into that market, take the quick win, and that will cause the shift that will happen. I don't think that these things will be a success specifically. Very few of them will come out as a success. I can just see everybody jumping on the bandwagon and doing it.
But just as a thought experiment,
I think it's a good. I'll fight you for
it. I'm very curious on Oz's opinion on something here. Let's say that Amazon did that. They set up, effectively Amazon Coin the same way that there's Binance Coin. And I don't know how much money moves through Amazon on a given day, or how many people would be sitting with the Amazon Coin in their wallet rather than using dollars via, credit card or what have you. But I think it's probably significant. Like, what does that do to the value?
But what is the utility case of this? Okay, if I already have Prime and my shipping is free or 2-day, and we've changed the expectation of the American populace in terms of I mean, we literally an entire generation.
First off, Prime is ephemeral. Amazon can change that anytime they want. But the use case is like, what's the use case of Binance Coin? There's not one other than
it doesn't matter. They're an exchange. Amazon has not an exchange. Amazon.
No. But Amazon the fact it's an exchange is irrelevant. What matters is that there's transactions.
Correct.
Can I
That's
jump in, please?
it's literally
Christina,
comes down to liquidity and velocity.
Yeah. What's up,
Agreed.
Kristina?
So I would like to kind of just reiterate that Fortune 500 has been doing loyalty programs and trying to like keep their community engaged for a really, really long time. They track that like click by click. It's the same thing as rewarding your users in a digital ecosystem for things that they're already doing. And because Amazon has such a strong brand, we talked about brands earlier, that rewarding your brand users with the digital token and being able to fractionalize their behavior and reward them for those kind of things, I see that as a very strong use case. And therefore, I would get in on it early, because I do also agree with what Gary said, is that the speculation, and once this starts catching fire and they go, well, some coins, doubled and they were backed by nothing, and this is backed by Amazon, the mentality of that, people are going to get greedy and people are going to shift. And that's good for us for mass adoption. It gets us in the mainstream news and things like that. But ultimately, it comes down to the real metrics behind it. And this is what CoinGenius looks at, which is what's your use case, what's your liquidity, what's the team behind it, how are you getting your word out, like what does it disrupt in the real world, what is the technology of the blockchain behind it, and what are the tokenomics of how it behaves in the market, and where are the cycles and patterns with it. So just because they're new doesn't mean that they're necessarily going to be successful. It depends on how that team uses that token within that industry. Now, the sky's the limit if they know how to use it right, but a lot of people don't understand the nuances of it. So
Right.
for those reasons alone, I would probably invest, my $50 in it, let it ride for a year and see what happens. Like, that's just me, because that's where my risk level is.
And that's, I think, right.
Sorry,
And it makes the securities laws interesting, but I really want to get Oz's opinion on this, because he's got some knowledge that I certainly don't. If Amazon, let's just assume the use case works for a second. If Amazon, Walmart, Target, Costco, Alibaba, anybody else you want to think of, all do this. Obviously, Facebook Libra is another example of it, or whatever they rebranded it to. If they all do that, and they're basically just adding to the money supply because their use case is medium of exchange for transactions on their site, theoretically speaking, what does that do to traditional currency, even if it's digitized?
Traditional, I mean, unless they do something that, like, look, there's a number of sites where we can go and I can purchase Bitcoin, and I can utilize that Bitcoin to buy an Amazon, or I can use it to purchase on a variety of other platforms. I think what's going to happen with Amazon is that they have to have a logically thought out plan and program for what they're doing with this. If it's just, I'm holding 100 coins, it's 5% discount. I'm holding 1,000 coins, it's 10% discount. I'm holding 10,000 coins, it's 20% discount. Yeah, you got a use case there. You definitely have a use case there. But the question then goes to utility. Who's using it? Then the second question goes to liquidity, right? Okay, how are these coins moving? Can I give these coins to someone else? Can I pass a discount in this transaction? Can I use this as part of the currency inside of this transaction?
Okay, so adjust it. I'm not talking about a staking type of mechanism. I'm talking about, I'm going to buy my gym shorts with Amazon tokens instead of dollars. I'm looking at medium of exchange.
It comes down to what's the floating point value of Amazon tokens at one point in time.
Well, they set it up as, it becomes a question of what's the transaction velocity on Amazon's site.
I'm telling you, it's gonna have to be a stable coin, because otherwise people are gonna get pissed. Okay, people do not understand I mean, look, it goes back to India and Israel, right? In Israel, until the United States came in the 1980s and stabilized the currency, if you basically you had to go shopping for groceries in the morning, because by the afternoon everything was like double, triple the price. Same thing happened in India. Same thing happened in Turkey, where they had to drop zeros off of the lira in order to stabilize at one point in time. You've got these insurmountable financial issues that come from currency markets that I don't think the average consumer wants to deal with. They're like, well, I thought it was going to be 10 Amazon tokens. Why did I have to pay 15 Amazon tokens?
That's where the fractionalization comes in, though. I mean, first off, if it's a stable coin, then the whole paradigm is blown, because nobody's going to buy anything based on value increase on a stable coin. Well, let's say that what's going on in the use case is that, my pool skimmer can be purchased for, $20 US fiat dollars, or I can get it for, $20 in Amazon tokens, except that Amazon's going to cover 5% of it, or whatever it is that they do to encourage us. There's a finite number of Amazon tokens. Let's say there's 1 million Amazon tokens. And initially the transaction volume on Amazon is such that, barely any of them are being used. But after a year, people catch on to the fact that there's a discount available, and suddenly everybody's getting that. Now, the $20 pool skimmer might have cost 20 Amazon tokens initially, but a year later, it costs, half an Amazon token. It's still $20 because, it floats. It's not changing the price of the goods. So that shouldn't be an issue. I mean, where I'm trying to get to here, though, is, if Coinbase is kind of taken over for being a bank by allowing people to get interest on lending crypto and staking, I see Amazon and Target and Walmart taking over for the Fed conceivably.
Exactly, I agree.
So I gotta jump in just really quick too. There's the other portion of it where Amazon gift cards are like a legal tender for like rewards for gaming, like that legality of what you can give back. Like Amazon falls in that category. That makes them a real strong use case. And I love that it's forcing eventually the world will catch up and understand that there's nuances to all of it. But I love that we're kind of having the conversation about how does money work? How would it work? And what would we judge them on certain criteria?
I think one thing that we can add to this is also the fact that Amazon's model, I think we saw it in Amazon, it was a good case was the diaper industry, that they decided to just take a massive hit on that entire market regardless, just so that they could destroy their competitors and then own that market. I think it was.
But we call that an antitrust violation, by the way, but we'll let that go.
Sure, but they've been doing this. This is their entire business model for years. Is that they're willing to take a hit. Yeah. And so if you think about if they wanted to keep something stable at a stable price based on their coin, they can take a hit or a gain on their on the goods that they're shipping without caring too much about it. If it means that they get to manage to get everybody to put their money, or a lot of people to put their money into this coin, and that, as you said, they'll make interest just by being a bank of that money. I mean, I think there are multiple ways where if you put everything together, there is a success to be had in this, and a domination. And I think Google and Facebook and others will do the same things.
Yeah, all right. So then that leads to the next question of, is the government really going to let go of government by economic regulation? Or do we see some significant legal issues that will be enacted to prevent this from happening?
Look, the SEC, the CFTC, as well as a couple of different states have gotten involved on the sort of education of this, but the CFTC kind of kicked it back to the states for about 2 years. Okay, and the states haven't really made a lot of decisions outside of Wyoming. Rhode Island is moving in that direction as well. Delaware is moving in that direction. Nevada is moving in that direction. But I think what this is going to come down to is it's going to be a question of, one, is it a U.S. domiciled token? 2, does it fit under those standards? 3, do they internationally domicile this, and what's the utilization case there? And 4, something that no one has thought about inside of this, there's no tax implications if you spend cash in those ways outside of sales tax, okay? What are the tax implications of spending this? Because across the land, it's a commodity and a currency, okay? And every time we cash a commodity, you got to pay a 40% tax on that. And so I think until those standards kind of come into play, or if Amazon is able to run this in a, if they're able to do this in terms of like a points program type thing, that works. If they deploy this another way, it raises a ton of legal questions. This could require a Sec D and a Sec S filing. This could require multitudes of additional filings overseas.
I love that you're raising it. I was going to stay away from the securities exemption piece of it, but you're right. What we've dialed down is really a giant Howey question on whether the Amazon token initial issuance is being issued as a security/investment or a medium of exchange. And that, my friend, is a Supreme Court case waiting to happen. Mm-hmm. that might finally drive something there, because unlike Telegram, Amazon can actually afford to fight that fight. Interesting.
And not to mention that we can also consider Alibaba and other places. I mean, we're mostly talking about US-based businesses, but what happens when we step outside of that realm? And a lot of
China's going to
businesses...
crush it like a paper cup under a mile of water.
No, but I will tell you that the trade war is about to heat up again, and there's going to be 3 issues: Hong Kong, the murder of Muslims and Christians inside of China, and overarching supply chain issues related to COVID. Those 3 things are going to hit real hard. And, you know, VeChain has something over there, Radiologics has something over here in terms of provenance on this stuff. But I'm going to tell you, when, you know, we're doing a lot of PPE stuff right now, and 70% of the KN95 masks that are coming over from China, 70% have fraudulent stuff in them, meaning like half of the masks are fake. You know, like it's not the right thickness. It just it just fails every criteria that they themselves have for their own standards. They have their own standard for these things outside of the FDA standards and the CE standards. You know, we're going back to questions that Americans had about chintzy manufacturing following World War II, right? And looking at like what the Japanese, they make nice little umbrellas for drinks, you know, that kind of an attitude. But this is really the problem that we're running into with the entirety of the supply chain here. And that's a problem. At the same point in time, India has loosened a whole bunch of regulations that allow companies to move in. And most of the material inside of the Chinese supply chain comes from India too. So if you look at a mix in between the diversification out of that country, you know, and coupled with these other factors, I really raised the question as to what is the long-term utility of China inside of the full manufacturing scope of what we have today, as well as regional diversification that's going to happen. You know, all of these global companies are going to be like, well, you know, we can manufacture some of this in Brazil, some of this in India. We'll put some of it in Vietnam. They'll do what Toyota's done with Toyota Quality Management, right? You just the full diversification of this across a multitude of different countries and just-in-time supply chain, which, you know, we're finding with COVID, just-in-time doesn't really work just in time. But I think that's the directionality that we're looking at here, and I think China is playing big. You know, kind of like it's like a big gusto move, like, oh, you guys aren't going to do any of this stuff. And I'm like, Japan has already said that they're going to pay for their own companies to pull their supply chains out of China. What do you think's next?
Yeah, I agree. I mean,
I'm
I'm from the UK originally, and there's I've got a lot of business that I'm doing over there, and we're seeing the kind of sentiment of buy British, and in the US we're seeing buy American. We're starting to see that kind of concept, and then you've got Donald Trump also pushing at the same time for that same kind of messaging, that the only way we can get things back to the way that they were is by bringing manufacturing home, giving those jobs to those people. I think when we've got a situation where technology is such a strong driving force, which is pushing jobs out of the picture, we're automating so many things. The amount of jobs we're replacing with technical jobs, people who need to have skills in programming or various other things. The only way to maintain the system in its current state is to bring those jobs home, quote unquote. That I see. Yeah.
I have a follow-up to that. So what we're seeing in the real estate innovation with blockchain is kind of this community hub type of approach, and everything is being like more technical. So like even your HVAC of your building can be optimized, and that becomes a technical job that's like offsetting for some of these things. And like those are community jobs now. Your church needs that, your this, that, and the other needs it. So I do agree. I think that there's a definite shift of staying closer to home, building your community. I know that I've gotten closer with my neighbors in my community, you know, during the situation, neighbors that I've lived next to for a long time, and now I know their names. So I do think things are kind of shifting a bit more close to home. And we've talked, you know, of tokenomics, of being able to like leave your hometown, but still kind of send money back or invest back in your hometown, so that that hometown doesn't become resources poor, whether that's, human capital resources to kind of keep the town moving forward, or its financial resources. And as we're seeing with blockchain and the PPE things with, Binance Charity and CoinGenius, as Oz was talking about, the quality of that and the tracking of that, and like making sure that those resources get to where they need to be, is becoming more transparent with the blockchain technology. So one of the things, I'm going to segue really quick here because we have to do a quick time check. But one of the things that's important to communities and important to Oz and a lot of the people on the panels here is energy prices and that data of energy prices and how you can like give back to the grid. And there's also the other side of taking off of the grid, which is part of the mining side of the house with Dustin Minch and our mining analytics and our segment Hash It Out. So Dustin, would you like to give a report out on anything new that's going on in the mining world? I know you were recently on a couple of shows and kind of shared some basics. Anything you care to share with the audience for this week?
Yeah. So the one thing that I kind of mentioned it, I'm glad you brought up that show, is, and I've been saying this for a while now, and a lot of people are like, well, what do you think about Ethereum switching to POS, proof of stake? And my only thought about that is when is it going to happen? They keep moving the stick out further and further and further. And, there has to be a reason why Vitalik and the team are doing that. Maybe they see that there's issues with proof of stake that they need to fix, scalability, I don't know, security, probably. And so they were, it was set to do it they were set to go to Ethereum 2.0 in either June or July. And now that date, based on some of the research I've done real quickly, that date's got pushed back again. And so we're going to keep mining Ethereum. Who knows when that's going to switch to proof of stake. Apparently you need 32 Ethereum to stake it. So a lot of people are accumulating that. But again, nobody really knows exactly when that's going to happen. And I don't foresee it happening anytime this year. The other thing that's kind of going on in the mining community, and we kind of seen this coming from a mile away, is for a lot of the NVIDIA cards right now, mining, the profits have came back up some, but lo and behold, Ravencoin, because of their recent fork, has become one of the most profitable coins to mine right now. And so that's, in a short, I'm going to keep it kind of short with that, but just to let people know, if you're looking for a good coin to mine, I would strongly suggest that looking at accumulating some Ravencoin, especially if you have an NVIDIA graphics card. And so, as far as like the ASIC mining goes, I did receive some emails from Bitmain. So it does look like that they're going to be able to get shipments out, a small shipment of S17s out in June or July, but buyer beware, the S17s have about a 30% failure rate. So if it was me, I probably wouldn't buy an S17. I would save my money and wait for an S19. So that's really it on the mining side. So
awesome. Thank you, sir. I'd like to note that this is week 2 of Dustin saying, check out Ravencoin. He mentioned it last week when he said that the fork was going to happen. We want to give a shout out to Mr. Tron Black. We love you, and Ravencoin. There's a lot of reasons why there's really amazing metrics behind that coin, and CoinGenius will be sharing that with you guys. But yeah, thank you for that feedback, Dustin. So I'm keeping track. I'm definitely keeping track of your calls here.
yes.
Hey, Mr. Jeremy Bourne, welcome to the party.
Hello. Yeah, I've been listening in, just being a lurker. A lot of fun conversations happening. Excited to have Mark Scarpa on the phone, so we'll introduce him in a second as well. But in line with a lot of what Dustin does, especially for CoinGenius, is unearthing opportunities that exist in the mining space. But above and beyond, what we're trying to do is really get an understanding from a data perspective as to what the opportunities lie in the mining space for new coins and new projects, especially with legitimate projects that are actually doing something, have a use case, have a strong team that has done it before. And I would argue that through any economic downturn, you see these diamonds in the rough that are forged, right? Whether it be GM or Ford or IBM, Uber, the list goes on and on. what are those companies in the crypto space? I want to hear from everybody, whether it's the Links to the World, or I know, Dustin, you've mentioned PegNet, but I know that during this economic downturn and all the things that are happening in the world, some of the most incredible companies, once again, will be formed and formulated. And I want to know what everybody thinks as some of those companies, what those are, what people should be looking at, and why they could be so impactful if they get it right.
Okay, so not investment advice, but I'm going to jump on the Link chain since you put it out there, and I'm a huge Link fanboy. It is by far my own personal largest position. You know, it's a classic example of, you know, the world needs to figure out the supply and demand thing. It's a supply and demand value driven coin with a use case of being the oracle that links the real world and notably IoT into a blockchain to facilitate a transfer of value. And to my knowledge, they have no other true competitors. They have their ish together. I've spoken to them about my own projects. They will integrate into data sources for free. They're, you know, putting it all out there, and they're forming, you know, partnerships with. I wish they'd form a partnership with my children to keep them quiet, but they're forming partnerships with, you know, the major brands. You know, they've got a Google partnership. They're partnering with banks. You know, they're. I think, you know, you have to look at what the circulating and available supply numbers are, which I'm not entirely certain of. But beyond that, they're really solid. I mean, I love Link. They are, by the way, probably an illegal securities offering originally, but we'll let that go for the moment.
I mentioned this before, but I think Basic Attention Token, again, is doing something with a real use case. I can see that the push for privacy and to also get rewarded, people understanding day by day that their own personal data has value and are getting rewarded for their time. I think we're going to see a moment where people realize they've just got a bunch of this random coin kicking around in their browser, and they're going to start spending it soon. Once somebody steps up and goes, oh, we've got a whole target market of, I don't know how many, I think they've got 20 to 30% of their user base switched on right now to taking BAT. Yeah, at some point people are going to start spending this. The use case is going to go up, and that coin will go through the roof. And then I think there'll be a lot of copycats after that.
Yeah.
But yeah, I see that happening.
I definitely want to check out the trade journal. Oh, go ahead. Go ahead.
Oh, yeah, no, sorry. I'm going to jump in and just take the super easy one for anyone new to the ecosystem. Ethereum is super strong. It is not like BTC. It's the technical base for a lot of dApps. It has a lot of like users on top of the token. So for anyone that doesn't know, that's a very strong use case over in crypto world.
Yeah, absolutely. I'm a huge Ethereum fan, and I kind of said that out loud many, many times. If you follow me on social or on our Discord, anything under $200 was a really good deal. That's my own personal opinion. That's what I say to myself. That is not investment advice of any kind. I have my lawyer on call right now. So Josh, yeah, hold me to that. But
don't listen to Jeremy, not advice.
Don't listen to me,
though,
not advice.
I'm going to ask people smarter than me on the subject on Ethereum. You know, there's a lot of competition for that use case. I mean, Tezos is live now and apparently functional. The Telos guys, who I'll shout out to Doug Horn, they are a client of mine, so I am certainly biased towards Telos, but they have a similar dApp platform kind of functionality. What makes Ethereum a long-term hit? Because usually I look at legacy software as likely to be kind of overridden. Anyone?
You know what? I'm going to jump in there, and I'm going to tell you that we are currently in a state of affairs where the state of New Jersey is looking for Fortran programmers to update their payroll systems. And as much as I've spent 15 years in the enterprise, okay, and I'm going to tell you that you're going to have a bunch of tokens that are probably going to have security issues in the next couple of months because they haven't upgraded from whatever fork that they're off of. Okay, that's number one. Number two, projects, you know, that I like. I think Telos is interesting. I think Dash is interesting. I think Digibyte is completely undervalued and has a massive community out there. Pack Global, obvi, because I rep Pack Global full disclosure, but we're also working on some technology solutions to actually allow people to own their images online, which hasn't really, I mean, it's like, look, who owns all of your images right now? Apple, Google, whoever else you're using. And what happens if something happens to you? They're gone. They're all gone. And you'll never ever be able to get them again. And there's a lot of challenges that we're running into, like inside of the ecosystem of the world we're living in today. And then I think kind of beyond that, we want to be looking at tokens that have increased utility. The not USDT, but the one that the federal government's going to be producing within the next 12 months. I think those are the ones that we should be looking at. But in terms of where we have to kind of look at the industry, I think look, I'm getting texts this morning that Bitcoin ETFs are going to be approved shortly. So what we're talking about is there's the Winklevoss ETF. There's a couple other ETFs that are going to be popping into the market space, and I think there's this interesting philosophical challenge that we're going to be faced with, which is on the one side it's a three-way philosophical challenge. On the one side, we have the nuance and nature of all these tokens that were forked off of Ethereum that may or may not become distressed assets. I mean, Scarpa, like one of our buddies who used to work out in Silicon Beach, is, he's all he's doing is distressed assets right now. And one of the jokes I had was that, like, distressed names are going to become something, because there's a lot of these things that were squatted on. The second is what we are continuing to talk about, which is the focus on velocity, utilization, the development of developer bases, and really uptake in terms of DApp and utilization in terms of whatever those tokens are. That's how the regular market's going to look at it. But when the ETFs come in, this is weird, okay? Because what we have is it is digital programmable currency in many cases. In some cases, it's still kind of quasi-centralized when you look at NEO and some of these other things that they really need to work a little bit harder on. But the challenge is now that you have people looking at it from the perspective of finance and not necessarily utilization. And I liken the time that we're in right now basically back to what happened in 1930. Because in 1930, for the first time ever, they started doing due diligence on projects and all the background research that was necessary to really understand the viability of something before just throwing money at it. Now what we're going to have, and this is where CoinGenius comes in, is these increased needs for diligence inside of portfolios so that people can actually understand what they're looking at. Because to Steve Quan's analysis on a weekly basis, sure, you can be looking at ups and downs and dips and that, but if you really don't understand like how the engine runs, and that's what these tokens are, is they're very complicated internal combustion engines. If you don't understand how it runs, and camshaft's thrown, what was the camshaft thrown? Well, that was the entire developer base like rioted over some sort of political issue that something, for something stupid the CEO said, and just decided to walk away from the token. Okay, these kinds of things are really what we should be looking at in terms of the risk factors inside of the next 2 years, because that stuff is all there. And outside of CoinGenius, outside of a couple other analysis tools that are out there, you're not getting that data. So I think that's very germane to the conversation we're having.
Yeah, I think there's something to be said about privacy tokens too. If you think about 6 months ago, pre-COVID, how I looked at privacy coins, decentralized applications, and decentralized finance, I invest in those for long-term, 3 to 5 year play. But I think with COVID and everything that's happening with the writing, I think, this is almost accelerating the use cases and the potential for adoption for a lot of these technologies, as to otherwise, like I said, 6 months ago, I wouldn't have thought that was the case. So you think of things like Monero, you think of things like other privacy coins like Komodo as an example. Do those have a stronger use case now? I mean, I would argue yes, because of the fact that there's so much distrust in governments globally, not only in the US. But I don't think people want to, governments peeking into how they're actually transacting. And I think these types of cryptocurrencies could be a solution. So I just want to get everybody's thoughts in terms of, do they align with that, or do you see that opportunity, or are we still a little bit off in terms of a year?
So I gotta Google what the name. It was something dragon. There's a Monero like development stack. So the Incognito project. Have you guys heard about this? So this is where's chat? This is what's launching on Ethereum right now. And I think that this is going to be a big game changer. And I heard a couple different like interesting names for it, but call it the Incognito project. Basically what they're doing is they're giving Monero, prior to Monero's forks and spoons, okay, because that token has become like 6 tokens. And if you're not familiar with a spoon, it's like a fork, but they give you an extra token. So spoon. And the weirder part is there's hard spoons and soft spoons, but let's not get into that. So the
Really?
yeah, yeah, this is 2 years old. This is not new stuff. That's the crazier part about it. But so if you look at, you know, the Incognito project, this is kind of coming up, and this is going to be a big question inside of this, because I understand people's need for liberty and their need to protect, you know, how they're having the privacy around their transactions. But at the same point in time, we've got money laundering, we've got human trafficking, we've got sex trafficking, we've got organ trafficking, and guess what ISIS is paying in? ISIS is paying people in Monero and Bitcoin. Okay, and ISIS is taking ISIS, not donations, but they're selling Yazidi sex slaves back to these charities in Monero and Bitcoin. And I think this is from an international perspective and a regulatory perspective where some of the biggest red flags come up. But I think really it's incumbent upon us as an industry to come back with like, well, what do we tell people? You know, what do we tell the average consumer out there who's like, I would be open to using this, but I don't want to support sex trafficking, right? Even though all this stuff is done in dollars anyways, there's an increased amount of scrutiny inside of this new world that we live in.
Yeah. So, you know, I think the stat is something like 3% of all laundered money is actually caught. So there's a little bit of a, you know, it doesn't have to be perfect, it has to be better than what we have now aspect to it. I don't think that there's as much of an effort to clamp down on the type of asset, because I think people recognize it's not possible, as much as there is a effort to clamp down on the location points where it can be converted into fiat. I mean, that's where they've got regulation. That's where, you know, FinCEN can get its hooks into institutions, and they're expanding that. And obviously the G20 is involved with the travel rule. I don't know the answer to the question. I mean, I guess I'm trying to roll over in my head whether it's going to make a difference at all, given the channels of enforcement that I think are going to happen.
I think kind of like what Brittany Kaiser's done with Own Your Data. I mean, it's an interesting concept. It's an interesting foundation. Right now, it needs to get more broad scale adoption around those types of ideas. But you know, we have to have something along those lines that, you know, protects not just us, but it protects really the underserved and the vulnerable. And I think those are the types of things that we really have to come beyond regulations, beyond is it legal, beyond is it a commodity. That's what consumers are going to be looking at, because the consumer of today, okay, the Generation Z, the millennial consumer, and millennials are 68 million Americans, and Gen Z is another about 60, 70 million Americans out there, okay, outside of Gen X and boomers and some of the great war that are left. And you look at this in terms of a global perspective. If you look at the slices in Britain, you look at the slices in Europe, percentage-wise, they're relatively similar. With some population dearth in Europe and continental Europe, and there's some increases if you go into like Australasia and Africa and South America. But that's sort of as a noted, you know, the challenges are really like, where are the standards? And that's what everyone's been looking to us for a long period of time, is like, who's putting the standards together? And like, look, I was involved in trying to put a standards body together. I mean, the problem is that you can't get a lot of people to agree on the same things. And Josh, I mean, I think you deal with this on a regular basis. You put everyone in a room and try and get them to agree on a couple of standards, it's a problem. Then on top of which, we don't have IEEE standards for a lot of these things that need to come to bear, because, and this is the messed up part about our industry, we literally have taken development, IEEE standards, weird manufacturing set standards like the capability maturity model, finance, arbitrage and asset-backed capabilities and slam them together in one thing. And that's effectually what we have inside of the blockchain and crypto environment. Now, some people are doing this interestingly well. I think Hyperledger, which I don't agree with in terms of philosophically as being a blockchain, is working really, really well with Stellar to do interbank transfers across countries inside of Europe. But what do you have here? And then the bigger problems I think that we're going to have are when new currencies, when new things are rolled out. Look, Santander has had XRP in their wallet for a hot 2 years, right? Banco Popular, I think, is also on that list. And then there's a couple of Swiss banks that recently could sell XRP. But what is that crossover? Like, where does that happen? Think about that. Like, where is that critical mass of like, oh, cool, I could buy dollars, I could buy this digital currency, I could utilize this for X, Y, and Z. Because the first use case for this stuff is going to be money transmission. All right. I mean, I don't have the statistics off the top of my head, but it's over $100 billion a year that's transmitted out of the country in order to support families.
Yep.
So look at the use cases that are coming from the simpler communities, and I think that's where we start to stick. But it's also their concerns. It's also the concerns of the younger populace, and all that stuff has to be kind of figured out.
What he said.
Yeah, well, hey guys, I know we have to wrap. Just before we get off, I wanted to pass it over to Dustin Minch because I know we were talking about opportunities and coins and projects that are promising as well. And he tells us a lot of this behind closed doors, and it's time for him to bring it out to the public. So can you just briefly touch on Pi and PegNet? Because I think those are interesting, and you keep talking about those over the last few times we've had the conversation.
Yeah, so PegNet is one of my favorite coins just because it doesn't require a lot of electricity to mine it. A lot of people can participate on that network, and it's essentially what I always tell everybody. It's like the developers from Factom and some of the developers from Ethereum got together and had a baby, and PegNet was born, right? And it's a pretty, it has a pretty unique use case where you can actually, use the PegNet inside of its wallet and trade into different derivatives such as gold, silver, 14 of the major fiat currencies, and then you got 14 other major cryptocurrencies. And so I see a lot of development happening on that project. And like I said, it has a very unique use case because you can trade in and out of these derivatives with this stable coin all within inside the wallet. You don't need an exchange. You don't need to sign up at Binance or do anything like that. So the other one that we kind of mentioned is the Pi network. And so we're all still kind of learning about this Pi network, but it's a phone app developed by 3 Stanford grads. And, essentially what they've been able to do is, they've grown so fast. Over last time I checked, over 3.5 million people have downloaded this app. And I suspect it's going to be some kind of social media platform that's going to be monetized in a different way. And, the way they got it set up right now is you download the app, you put in the invitation code that you get from people, and, you log into the app once a day, and you're essentially earning those coins through. It's not technically mining. It's more like a faucet where you go into the app every single day and you engage with it. It does look like they finally, what kind of interests me about that project is these Stanford grads have not asked for a dime from people. They were spending almost $30,000 a month on servers just so that everybody could just enjoy Pi right now. Now, they are looking at developing some use cases, and they've begun to monetize it with ads. And so it's kind of a cool, a pretty interesting project to be a part of because they're going to have, I think Carl knows more about it than I do, but they have like pioneers, contributors, different levels of people that, sign up for the app. And I think if you're a pioneer, you get to be, you get to kind of vote and delegate, new proposals that are going to be happening on that blockchain. So, I always tell everybody, it doesn't hurt anything to download the app, log in once a day, and earn the cryptocurrency. And it does seem to be backed by, people that genuinely care and want to see that project go through. And then, the same thing with PegNet. It has a very unique use case. I really like the team behind it. And, they're actively working on that every day. And kind of my philosophy with it is it doesn't really take you a whole lot to accumulate it. You know, of course you could go buy PegNet, but what's the fun in that? It's way more fun and interesting to me to be able to take my laptop that's sitting over here in the corner. You probably can't see it because I'm having lighting issues today, but I just let that computer run, and, you know, I earn anywhere from, 50 to 100 PegNet a day. So it's maybe burning about $1 to $2 worth of electricity a month. So to me, that's, that's kind of the interest behind it, where it's not, a huge investment like Bitcoin mining to, get in on these. So, yeah.
Awesome. Thanks, Dustin.
Yeah.
And I love that the Pi Network calls their users pioneers.
Yeah, I like that too.
It's really cute. And all you have to do is literally just tap your phone once a day. That's how you mine. So we got a little extra time Jeremy's covering. So if you guys want to give some final thoughts, and then I'll do the wrap up.
Anybody who can come up with children be quiet coin, I'm interested in investing. That's all I can say.
We've had to resort to large scale negotiations of how we're going to allow access to like friends in other states. I mean, it's crazy, but you can figure that out.
Mine are too young for that.
I'm dealing with a 6-year-old, so
No,
I taught her negotiations early on, but she's not still. I'm still kind of working through that.
Yeah, no, my 6-year-old's there. My 3-year-old, though, he there's no negotiating pattern. He's very difficult. You need rationality.
Like a lawyer.
Darn it. We're in such trouble when our kids are teenagers. We know it. We're just,
not to shift gears on you guys, but it's going to be interesting to see with all the, the controversy that's going on in the United States. How is this going to, it's going to be interesting to see how this cryptocurrency market unfolds in the next 3 to 6 months in my mind. So, you see people say it's going to go down, it's going to go sideways, it's going to go up. So I'm just kind of patiently waiting, to see, how it unfolds.
I'm just watching collapsing economies like Venezuela and people who are fleeing countries, and instead of taking their possessions with them, they take a wallet that nobody knows that they own, skip over the border, and take their wealth with them. I think there's an absolute use case at the moment for it in that way. And as we seem to be devolving more and more by the day, even in major countries, we'll start to see a use case and people hiding money and doing various things.
Why haven't we talked about the use case of escape from the despotic totalitarian regime? That's a great use case.
Yep.
I like it. Yeah, I mean, this is not my area of strength at all, so certainly don't do anything based on what I say, but I can't tell you it's going to go up necessarily, but I don't know why the crypto market would go down right now.
Oh, we've seen that it's somewhat correlated with stocks, but it's reasonably decoupled. And I think really what it's going to come down to, and I think, Kristina and I have talked about this before, it's what starts to be looked at in terms of the value of digital data inside of the functionality of digital programmable currency. And I mean, just understand, we're going to start coming up with new indicators probably on a monthly basis going into 21. And that, I think, is really exciting. But at the same point in time, it's going to take a lot of the old platforms, Reuters, Bloomberg, that sort of thing, and it's going to outmode them inside of this industry, and they're not going to be able to keep up. The other thing, too, is that, they hire, it's interesting, they hire a lot of institutional folks, but I always find the R&D or sort of the thought leadership departments of most of these companies are more pretty window dressing of like, here are my shiny PhDs. Take a look at them. And it's like, what can your shiny PhDs do? Nothing. We have authorized them to spend nothing and do nothing. So that's kind of like the challenge, I think, from corporate America, whereas the innovation inside of our sector is still strong. The question just kind of comes down to what's going to happen with acquisitions and shelving. And hopefully with CoinGenius and a few other projects, we can prevent some of that stuff. And also what the longer term impacts are when some of this stuff is purchased, right? What happens when there's a trading token that has a technical back system to it that gets purchased by a multinational? What happens in that case? And I don't think we've given enough thought to this, including the long-term implications and ramifications of this stuff.
Different topic, but I've given a lot of thought to that actually. I started thinking about blockchain M&A in 2017 when I was refusing to get into the ICO market. It's very, very, very interesting, and particularly in this country, what is it worth to get administrative rights to a distributed token for a use case when otherwise getting it distributed is a securities violation?
Mm-hmm.
Agreed.
Interesting.
All right. Well, it looks like we need to wrap up. Gary, any final thoughts? Thank you so much for joining us today.
Yeah, appreciate you having me here. No, I think that my final thoughts were like what I just said. I think that there's multiple things to be said. There's so many great conversations that lead on to the next, that there's nothing final to be said, only to be continued.
Excellent. Well, thank you so much.
Thank you so much.
Mr. Josh Lawler and Sultan, Dustin, Minch, thank you for joining us. CoinGenius team, thank you for joining us. And to the audience, if you'd like to dive in more, you can find content like this on our media library at coingenius.ai. We also have our Q2 quarterly Collective Intelligence Summit coming up at the end of June. That is June 25th and 26th, where we will have more panels, a G-Tank pitch competition, and also some CoinGenius University breakout sessions to really dive into these topics and allow the audience to kind of ask questions back to our CoinGenius professors. In the meantime, if you need to get a hold of CoinGenius, you can find us on our Discord where our team is live, and you can tag me anytime at @GirlGeniusXP. Thanks everyone. See you next Wednesday.
Thank you.
Bye-bye.
Bye-bye.